Welcome back. I'm Pratap here. Today is 2nd December 2024 and this is a very interesting video. In this video we are going to discuss November month HLQ zone strategies and performance of the high liquidity zones generated in the previous report, and also we are going to discuss about lesson 27, the last analysis, that is a POWERGRID MIT analysis. I suggested one intraday or short-term trade opportunity, and today that is executed. Those who listened the analysis properly, probably they would have planned their trade and they would have got a very good profit from the trade, because I explained the entire analysis. That also we will discuss at the end of this video. Even before that, all of you please understand, we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel homepage, you please click on the tab posts. Some of you might be seeing the tab community. Click on the tab. You get access to a post having all about our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. The last video I released yesterday, that is about lesson 27. But you need to start your training. If you are the first timer, you need to start your training from lesson 1.1. For that you need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So please join at our Telegram channel. Even the link to this training course also I provided in this video description. Okay, now let's get into the analysis discussion. First, let's start with the statistics. November HLQ zone trades. During the month November, our NeoStock software identified several HLQ zones. In that, 47 zones gave you the trades. Out of these 47 stocks, 40 trades are successful and 7 are stopped out. Because always we are claiming our HLQ zone will be having 80% success rate. That is what we've been observing for the last 1 year. Apart from that, our HLQ zone average intraday ROI, they are giving you 6% as per one futures margin cost. Now look into the statistics, how we achieved both those statistics. The first one, minimum 80% success rate. Yes, it gave during this month, it gave 85.1% success rate. And what about average intraday ROI? Average intraday ROI during this month is very good, excellent. It gave you 6.3% average intraday ROI for all these 40 stocks together, including stopped out trades. All these 47 stocks. That includes 40 successful trades and 7 failure trades. By combining all, it gave you 6.3%. If you would have eliminated these stopped out trades and if you would have looked into these 40 trades, probably you would have got more than 8% intraday ROI, because many trades during this month, they gave above, especially between 7 to 10% ROI they have given. Majority of the trades which are successful. But the number is down because of the 7 failure trades. That also included in the overall statistics. That is how we calculate. Because failed trades are also trades. They are valid trades. Some of you might have taken these trades. Stopped out. If it is stopped out, some of your money will be reduced from your capital. If that is the case, whatever the profits you get from that, these reduced, stopped out trades also should be considered. So that's why every time we do the calculations based on the overall executed HLQ trades. And every day we are discussing these trades. And also I am registering all these trades in this Excel sheet. We have this Excel sheet. Here all these are all November month trades. We have all the months are available, but November, see, from here they started, November 1st onwards. All these are all November month trades. If you look into this, all these trades. Every day we are discussing these trades. See, total 47. Look into the count. Total 47 trades. All these are all. And this ROI, because I dragged my mouse on these ROI column, that's why it has given the ROI, average ROI 6.3%. Excel sheet does the calculation. It sum all these and divided by total number. That way it has given 6.3% average ROI. This is our intraday ROI, including the stopped out trades. If anybody would have, let us assume, if anybody would have taken all these 47 trades, total sum is, you might have got 296.9%. That means close to 297% ROI you might have achieved on all these trades. So that is excellent. So your total investment would have been doubled by 2 times more. Close to 3 times, because close to 300%, the total sum, ROI. See, that is the power of these high liquidity zones. But only thing is, properly you should learn the concepts. Properly you should practice all the concepts. How to practice the concepts? I already gave you the recommendation how to study or how to study your course, because I provided complete free training. You can't blindly listen all the videos one by one. That doesn't give you benefit. You need to practice in between. How to practice? First, how many lessons you should complete. After that, how much time we should practice. While practicing, how you should do paper trading. All the instructions I have given. All the instructions are available at our Telegram channel. I kept the instructions in the pinned message at our Telegram channel. All the new members also access that pinned message. You can read all the instructions. In case if you want to understand the instructions as the explanation I have given, even the instructions I provided in one of the videos. Let me show you. So did I delete? Sorry. So in these videos, from the top, where is that video? 21. Yeah, look into this premium service video. Because NeoStock is, our channel is offering a premium service for getting the NeoStock software reports. That is for people who completed the course and practiced a lot. For them it is useful, not for the beginners. Don't click into any of these premium service videos until you complete the course. Open this video. In this video, the second part of the video, I have explained the training instructions in detail. All the training instructions. I have explained how many lessons you should complete first, and then when you need to practice the concepts, and how much time you should spend for doing paper trading. So that much time you need to spend. Continuously, if you are listening the videos, after some time, you won't be able to follow the rest. You won't be able to digest. That's why breaks are required in between. During the breaks, you should practice. Simple question. Next 1 week food, will you be in a position to take today itself? It is exactly the same if you are trying to listen all the video lessons continuously. Listening the videos and completing the course is not important. Listening the videos in effective way is important. Those people only become good traders. You are very sincere, you are listening, but you are not listening as per the plan. There is a difference. Listening the video course is different. Listening the videos as per the plan is different. As per the plan means according to the training instructions I have provided. So please listen this video, premium service video, the second part of the video. First part I explained about premium service packages and their cost. Second part I explained because this course is valid only for the people who completed the training course according to my instructions. Because those people only can make the money, good money in the coming days. If you follow my training instructions and complete the course, then you will act like a pro trader. So that's why it's very important. Follow the training instructions as I mentioned in this video. Okay, now look into these statistics. And these statistics is the result of the training course what you have learned and the software that is helping us. Software is helping according to the training program what you learned. You are applying your concepts and the software results. That way we are getting successful trades. See, out of 47, only 7 trades are failed. 40 means it's a huge success. That's why it is giving you that much ROI. Average ROI 6%. Overall ROI is during this month is 296%. Close to 300% for all these 47 stocks together. Okay. So this is about November month. Now let's get into the second part of today's session, that is about HLQ zone analysis. We got good trades today. From 2 stocks we got 3 trades. All are successful. One zone is violated and we know that the zone will be violated because we discussed that video on last Thursday. I explained how I fine-tuned. That day I told that is a fine-tuned zone, is a tested zone. That means it will be violated. That is what happened today. Okay, and how we got the trades, especially in NTPC is also as per the concepts I explained on last Friday. Last Friday video, we discussed NTPC. I shown you fine-tuned zones. From those zones only we got the trades today. The only thing we didn't discuss is the life insurance because it is a new zone identified yesterday, and moreover, LIC. Moreover, LIC is recently added stock into the F&O list. Last Thursday only this stock is added into the F&O. And today we got the successful trade. Okay, how our software identified as a drop-based drop with ProGap. And this zone we fine-tuned with 7, this is a daily zone, daily high liquidity supply zone. And this one is fine-tuned with 75 minutes time frame. This is a drop-based drop with ProGap. And did you notice today's market is bullish? Even then, our supply zone gave a good trade. Market was moving up today, but still this zone gave a short trade, very good short trade. Okay, we have a 75 minute zone drop 4 base candles and again a drop. And this 75 minute zone is fine tuned with 15 minutes time frame. So here you have a ERC candle as a leg-in, you have a base candle, and again you have a drop candle. Drop, base, drop. Within this 15 minute zone, again you have a fine-tuned 5 minute zone. And a fresh zone. It's not tested. This 5 minutes, this fine-tuned 5 minute zone. So this is a ERC candle. Drop, base, you have a base candle here, and then with hidden body, leg out candle. And this is the area we are planning our trade. That is what we do every time. Same thing we are discussing for the last 1 year in the HLQ zone analysis. These fine-tuned zones. Many times these fine-tuned zones work very well. Many times means more than 80% success rate level they work. We have failure rate less than less than 20%. That is what we have seen even in November statistics. Every month we are seeing these statistics. Now see what happened today. Today price has entered into the zone, here just it gave the trade and then sharply it came up to the 15 minutes target. Where is the 15 minutes time frame? Here. We have a rally, base, rally. It gave the trade and then it reached the target. When it gave the trade morning 10:15, 15 minutes candle. When it reached 10:30, 15 minutes candle. That means within half an hour the trade is completed. Okay, let's go to the 5 minutes time frame. You get better clarity. So today morning at 10:20 candle, it reached this fine-tuned zone. And then sharply, continuously, it's coming down and reached. After that, this 15 minute zone is violated. That is a different story. But it reached. When 10:40 candle, 5 minutes candle. At 10:20, 5 minutes candle. 10:40, 5 minutes candle. That means within 20 minutes, this trade is completed. If you go to 1 minute exact, how much time we spend in getting the profit. When it gave you the trade in the morning 10:23 candle, it gave you the trade, and when it reached the 10:43, that means exactly 20 minutes time it took. Of course, small entry buffer you should add. How much entry buffer? Minimum 5 paisa if you would have added, your trade is executed. From this proximal to this high of this candle, difference is only 5 paisa. Definitely will add, this is a 1000 rupees stock, so definitely you will add at least 50 paisa or 60 paisa or up to maximum 1 rupee you would have added. Maximum 1 rupee entry buffer. Generally we take some 50 paisa, 20, 30 paisa, 40 paisa. But 5 paisa is good enough, anyway, your trade would have been executed. But anyway, this is a negligible thing to discuss about that, because you all clearly learned about your entry buffers. See how it gave. Excellent profit today. After that, the zone is also violated and further went down, but that's forget about that. This is good enough for us. Continuously it's down. And moreover, LIC is a new stock added into the F&O 2 days back. 2 trading days back. That is last Thursday, F&O. Last Friday, not Thursday. Thursday is ending F&O expiry date. So new month started from Friday, last Friday. Today is Monday. So this is the power of our high liquidity zones concepts you should understand. See how much profit you would have got from this. LIC gave you 6,440 rupees profit, which is 5.3% ROI. And moreover, the futures margin cost is less for LIC. It's around 1 lakh 10,000 or 20,000, less than 1 lakh 20,000. You got 6,400. So whoever took this trade, definitely you got more than 6,000 rupees profit, no doubt in that, because it is a very clean trade. And moreover, whatever the money you paid for the premium subscription, you got today itself. All the people who took LIC trade and took NeoStock premium subscription, today you would have got the money back. That means the rest of the money is free for you. Whatever the reports you are getting, they are free reports. Why? Because today itself you got the money, you recovered your investment. See how premium subscription is helping the people, but it won't help you if you take the premium subscription without completing the course in a proper way. Even if you complete the course without a proper way, it is not useful to you. You should complete the course, you should practice, you should do paper trading, you should listen some HLQ Zone analysis videos. All these steps, you need to invest some time on this. Patience is required. At least 3 months time, minimum time you should spend for completing all these activities. Minimum 3 months. Some people may take 6 months also. You should feel this duration is you are investing the time for your future. So this is the very important point you all should observe. That's why I kept the conditions for the premium subscription. People should complete the course. You should practice good enough. Then only opt for this premium. Because your premium subscription is not important for me. For me, what is most important? You should make use of these premium subscription videos in a proper way. That is more important to me. Without learning, if you take the course, what will happen? You don't properly fine-tune the zones. You won't get the trades. So you have seen LIC, it is very clean and neat, right? Even that level of fine-tuning, if you are unable to do, you won't get the trades. It is a very simple fine-tuning, no complication at all in LIC. So when you are able to do such kind of things, many stocks, such kind of trades you will be getting. So that's the reason why learning the concepts is very important to get the money. Without learning, you won't get the money. See, what is more important for me, why I am insisting all you people learn and practice, then only you go for premium subscription. Why I am not making you hurry to take this subscription? For me also it is important. I don't want you people to take the subscription and leave the next month because you didn't learn the course properly and you are not properly using these reports. I don't want that. What I want, if you take the premium subscription, you should also continue. Next month, and the following months. Because there are people who are taking the subscription for the last, from August we started. From August till they are continuing. Why? Because they learned the concepts properly. They practiced good enough. They are not hurrying. They know how best they can make use. And a few people took the premium subscription in the month of October. Why they are continuing October, November, this month, December? Why they are continuing? Because they learned the concepts properly. They know how to make use of our reports. They know how to get the money. I'm not giving any recommendations to anyone. I'm trying to make you independent traders. That is the reason why I'm not providing any analysis to you guys. Maybe first time when you are learning the concepts, I am providing you how to do the analysis in the form of my training videos. Even yesterday, lesson 7 also, people understood. Now how they should analyze their MIT stocks. All these days they are facing problems. Many people requested me to do DIT analysis or WIT analysis or MIT analysis. Why I didn't do? Because I am making them to wait all these days. Because I want them to go through all the practical issues before they get into this lesson 27 I released yesterday. Some struggle is required before you learn the concept. Without the struggle, if I explain, you people just listening, after that, the concepts will go out of your mind. The moment you struggle, you gain some knowledge about how to face the issues. And then when you learn the actual concept, you perfectly, 100%, you will be able to understand the concept. That's why I gave you the training plan, training instructions, how you should learn the concepts. That is very important. If you follow the instructions, you do paper trading. If you do the paper trading, you see real practical issues. After completing the practical issues, if you attend the next lesson, then you will understand the essence of the next lesson, whatever the concepts I am teaching you. Without seeing the practical issues in the live market, if you are learning the next lesson, it is just like listening the concept. Okay, our trainer is explaining the concepts well with good animations and presentations, PPT. I am able to understand. You feel like that, but that is not enough. Understanding the practicality is important. That practicality you will get only when you practice the concepts before you move on to the next training lesson. This is what many people are missing, which I don't want you people to do like that. Hope you understand how to learn the concepts and how to earn the money. See how perfectly our analysis worked. Same thing you will be able to do. It is not that I am great because I did the analysis, it worked. No. Even if you do the analysis, you will do the same analysis. But only thing is, you should understand the practical issues before you do that analysis. How you get the practical knowledge? When you do paper trading. Of course, you can also do real trading, but you should invest some money to lose in case you make mistakes. When you lose the money, you get even more experience. Because pain will be there, right? Because of the pain, you try to find the solutions. You try to get answers to why that happened like that. With that pain, you gain even more experience. But how many of you people are willing to lose the money? How many of you people are willing to lose your capital? Nobody, right? That's why paper trading I have suggested. Okay, LIC has given 6,440 rupees, which is 5.3% ROI. And the next stock is NTPC. NTPC already we discussed last Friday. Last Friday we got a trade from NTPC. Look into the last, 29th November, last Friday, we got trade, 6.2% ROI we got. But today we failed to get 6.2, we got only 3.4%. Why we failed, I will explain. That is only you should learn. When to exit. By foreseeing the issues is also a very important skill. I've been teaching that skill for the last 1 year. People who are listening my HLQ analysis videos continuously, they know where they should exit in NTPC trade in today's trading session, rather than waiting until 15 minutes target. Reasons are very clear. You already learned these concepts because every day we will see, not every day, every week we will see at least one stock related to that particular scenario. At least monthly 2 or 3 stocks we will find. Okay, NTPC is a 75 minutes, this is also a daily high liquidity demand zone. I already explained how I fine-tuned in our last Friday session. please look into the Friday HLQ analysis video. Because there is no need to explain this fine tuning, because whatever the fine tune that I already explained in Friday, the same zones we use it today, and today we got trades from both the zones. That means whoever took the trade in NTPC today, probably if you followed my Friday analysis, today you would have got 2 profits, 2 trades, and both the trades you would have gained the profits. But only question is where to exit. That decision is very important today. Otherwise you won't gain, you might be losing some of your profits. Your profit margin would have been reduced. Why profit margin would have been reduced? You need to understand the real practical issues in the live market. That is what experience. Okay, let me quickly go through. Here we have a 75-minute zone that I already explained. We have 2 75-minute zones, LOTL zones. We have drop, base, rally, failed ERC candle. Again failed ERC candle as a leg in and base, and again rally. Both I explained in Friday's video how I fine tuned. Within these 75 minutes LOTL zones, we identified 2 5 minutes, 15 minutes order flows. That is what I explained here. This is a drop, base, rally. Why I am saying drop, failed ERC, dynamic view, it is a drop, base, rally. This is the 15-minute zone. And another 15-minute zone within this area we didn't, we have here. Where is it? There is no proper 15-minute zone here, but we have drawn lower time frame zone as an horizon to higher time frame. That trade we got again today. We got both the trades. So the first one, we got a successful, after that the zone is violated. But I will explain. And this zone is having a rally, base, rally. This is the fine-tuned zone. This fine-tuned zone is acting as a HLQ zone because it is giving multiple tests. So that's why I suggested again another trade in this zone. That is what we got today. 2 times prices entered, second time it is violated. Why it is violated, that also we know. We know that zone will be violated second time. Why? That after seeing today's price action you will understand. But before that there is a drop, base, rally. This is a 5-minute zone as an horizon to this 75 minutes high liquidity zone. Sorry, fine-tuned zone. This is the 75 minutes fine-tuned zone. And the order flow is picked up from this drop, base, rally. That's why we have LTF zone as an horizon to higher time frame zone. Mostly it is having strong institutional order flow. That's why Friday I suggested you, the moment the first high liquidity zone is violated, you can plan a trade in this. But we didn't plan any trades in between. See, today prices exactly after violation of this high liquidity zone, prices came near to the zone, picked up the orders and came down. A little entry buffer, with a little entry buffer, it will pick up and it went up. Let us see what happened today. First we got a trade in this zone, this high liquidity zone. Why we are calling high liquidity? Because this zone is tested multiple times. See, I have taken today as a type 2 proximal entry. First let me draw type 1 proximal entry, wick to wick, rally, base, rally. So here we got the first test, and again second test, and again here third test, and today it is the fourth test, and the fifth test it is violated. Why fifth test violated? I will explain. But before that, I should also tell you, I already explained in Friday HLQ analysis video. Here it created a new order flow here again. Rally, base, rally. You can also look into the 15-minute zone. This is already a 15-minute zone. In this fine-tuned 5-minute zone acting as a high liquidity zone. See, 15-minute zone also we have a drop, base, rally is created again. Generally when such kind of price action takes place, in HLQ zones we will see such kind of price action. Drop, base, rally. That's why we are planning our trade from this zone only, fine-tuned 5-minute zone. This drop, base, rally, again we have a fine-tuned 5-minute zone. That means a fresh order flow is there here. Rally based drop. But we didn't take entry here. We are taking within this zone only. Why? Because this is the horizon. Always we take trades from the horizon. Horizon will give us a more success rate. Friday prices did not enter into this horizon. A little before, with some entry buffer, it picked up and reached the 15 minutes target. Here we have a 15 minutes target. It is having a fine-tuned 5-minute zone. Why we are targeting on this fine-tuned 5-minute zone is first, this is acting as a HLQ zone. Second thing, this 15-minute zone is not very clear. It is compromised zone. That's why this is the horizon where the order flow. That's why we are targeting up to here. See how many times prices went into this area. But today it failed to reach. But what happened? Today it picked up the orders. It gave up to this area. Why up to this area? I will tell you. It has given 4.8% ROI it has given. But let me delete to make it clear on the chart. See today, it gave a trade. When it gave morning 9:15, 5 minutes candle. If you exactly look into 1 minute candle, prices are there in this zone for multiple 1 minute candles. So we got on morning 9:18 we got the trade. If anybody missed in this candle, next few candles prices are here only. 9:19, 9:20, 9:21, you know what happened? Prices reached till the distal line and moved a little below, 5 paisa below the distal line. And then moved up. Definitely our entry buffer will be here, our stop buffer will be here. But whatever the price moved, only 5 paisa below the distal line of this fine-tuned 5-minute zone. And then prices moved up. And here we have a rally based drop which is very clear in even 1 minute time frame. This is 1 minute zone. Rally based drop is there. This rally based drop is acting as a high liquidity zone. Multiple times the zone is tested. This is the first test, moved down. Second test, again further moved down. Third test, further moved down. Again fourth test. Now finally it pushed the prices and came out. Generally what happened? After second test or third test, probably we will realize and we will exit the trade. Because we know that this is acting as a high liquidity zone. It's not easy to let the prices reach. If institutions add more order flows, again it will go, prices will go down. Like see, finally in the fifth test, the prices were started moving down. At least third or fourth test you should exit. Many times third test. Second test is a very clear message to us. 2 times successfully tested and price came means definitely third test there are higher chances you should exit. Suppose if you are having confidence that this will be violated at any instant, at the time you must use a trailing stop loss. The moment you use trailing, some profit you have to lose if zone is not violated and moved up. Your trailing, for here demand zone you will use a trailing stop. The demand zone will be violated. At the time you have to exit. Because of that some profit you might be losing. So that's why it's very important to understand where to exit. Definitely you need to build a skill. What kind of skill? For quick decision making, right decision making. So those who exited here, you would have got the maximum profit. Those who would not have exited and used a trailing stop loss, probably you would have got only half of the profit what you got actually. Because the zones are somewhere here. You have to wait until the zone. See, now prices came near to the zone. You get only small profit. Okay. Till this 1 minute high liquidity zone, if you would have exited, what is the profit you would have got? NTPC first trade you would have got 3,600 rupees profit, which is 3.4% ROA. Because NTPC also around 1 lakh or 1,10,000 rupees margin cost in futures. That's why you got good ROA, even though it looks like 3,600. Maybe you would have brought two futures. If you would have brought two futures, you would have got some 6,000, 7,200 rupees profit. Generally, you will keep 2,000 or 2,000, 2 lakh, I mean, sorry, not 2,000, 2 lakhs or 2,50,000 rupees. Generally, you keep in, you will invest for buying one future. With that money, you would have got two stocks, two futures. With the two futures, you would have got the same capital, 2 lakhs or 2.5 lakhs. You would have got 7,200 rupees profit. But that's why always we look into the ROI. ROI always gives clear picture, because ROI we are calculating based on the margin cost of one future. So the exit should be at 1 minute high liquidity zone. It failed to reach 15 minutes target. Sometimes such kind of HLQ zones will be preventing prices to move further up. So these HLQ zones you should properly observe. Then only you get the right place to exit your trade. Okay, this is the first trade. Because this is pierced, this order flow has gone. Next time easily this zone will be violated. See, easily the zone is violated. Maybe sometime, maybe institutions are trying to add some other people, whatever the reason, they are trying to add some demand. That means long orders. And bears are adding short orders. There was some fight here in this area. And finally, there is no strong order flow, earlier strong order flow, because everything is consumed. It is only just a matter of some time. Price action will be where bulls and bears will be fighting. Ultimately, bears dominated and prices came down, and it reached our second zone, the lower time frame zone, as an horizon to the higher time frame zone. Let me go to the 5 minutes time frame. We took type 2 trade, calculated as per type 2. Because earlier it gave type 1 entry, now type 2. Here, high liquidity zone. But anyway, here we have a drop base rally. This is the lower time frame zone as an horizon to the higher time frame. The 75-minute zone picked up the orders and moved. So we are having strong belief this zone is having a very strong institutional order flow. Next time when prices enter, we should not miss it. That is what we discussed in our Friday HLQ zone analysis. See, today prices entered into the zone, but before entering, a small entry buffer is required to this zone, a very small, maybe few paisa. Our actual entry is 356.90. And prices came up to 357. That means minimum 10 paisa entry. If you would have added, generally will add some 30 paisa, 25 paisa entry buffer you will add, because the stock is around 358 rupees. Definitely some 30 or 35 paisa you might have added entry buffer, your trade executed. But what I am trying to say, minimum 10 paisa is required to get the trade, or 15 paisa to get this trade executed. But here also there is a lot of struggle here because of the supply. There is a fight between institutions, bulls and bears. Lot of time is struck up here, near the zone. If it is away from the zone, we would have exited the trade. But a lot of time, I am sure some of you might have exited here somewhere. Let me draw a horizontal line. Because most of the time prices were moving before, you might be having concern. Maybe it may not move further up. Some of you might have exited here. And again prices came near to that. Maybe some of you might have taken a second trade also here, who knows. Or some of you might be still holding without exit here, who are believing it will reach this next target. What is the next target? Next target is the 15-minute zone. Here we have. This is the target. Rally, 3 base candles and a drop. Base candles, medium size candles. Here we have a big candle, but already prices are coming down from here. So this is the real institutional 15 minutes order flow. So you need to aim up to this zone. So that's why here you have 1:3.17 RR is there to plan your trade with some stop buffer and some entry buffer. So you got the trade, but a lot of time we need to wait here. Let us assume if you would have waited, here the real problem came. In 5 minutes time frame, there is one zone acting as a high liquidity zone. Drop, base, drop. Some pro gap is also there when it was created. It gave the first test, it gave the second test. Again prices came down, third test, again came down, fourth test. Here again, lot of time within this area, and market is about to close. About to close means it's already 245 in this candle. Those who took cash trades, definitely you have to exit here before 245. Probably you would have exited within this 5 minute zone area. But those who are taking the futures, you can hold till the last minute of the closing session. See, after that again prices came. So almost market ending. If you would not have exited in this 5 minutes high liquidity zone, maybe you would have exited somewhere here. Or maybe you would have used 1 minute trailing stop. Somewhere here you would have exited. Maybe somewhere here, one of your 1 minute zones might have been violated. Here. The blue color line, go to the 1 minute, you will get clarity. Here there is a 1 minute high liquidity zone is there. Rally, base, rally, which is not letting the prices go down. And here 5 minute zone, which is not letting the prices go up. That means prices are moving within this area. See, they were moving within. The 5 minute zone is pushing, 1 minute zone is holding, again it is pushing up, again it is holding and pushing down. Again it is pushing up, almost reached near the distal line, still again it pushed. This time it is violated. Because 5 minute zones are much power than 1 minute zones. In general. Sometimes 1 minute zones could be much powerful than 5 minute zones. But how I am comparing high liquidity zones point of view, obviously 5 minute zones high liquidity is much powerful than 1 minute high liquidity. Finally violated, but if you observe properly, almost this is also violated, almost. It reached the distal line, touched the distal line and then came down. But this is completely violated. If that is the case, when this 1 minute high liquidity zone is violated, you would have exited here. If you are using 1 minute trailing stop loss, this is the ideal scenario. So that means you would have booked your profit here at this blue color line. You would have got a small profit. But those who observed this 5 minutes high liquidity supply zone, this is the right area to exit at least after the second test. Go to the 5 minutes, you will understand. This is the first test, this is the second test. Maybe this is the third test. Somewhere here you would have taken a decision. If not here, definitely you must exit here, fourth time. See, after that it pushed down. So that's why we should be very careful when you find lower time frame high liquidity zones. They may not be letting the prices move until your 15 minutes target. But in this process, definitely you will lose a lot of time. Time is also important. If you book the profit early, same money you can invest for some other stock. So that's why. But anyway, from here to this 5 minute zone, definitely you won't achieve 1:3 RR. The reason is 1:3 RR is up to this 15 minutes target zone. But why we are exiting before? Because it is not letting the prices. It looks like it is impossible to achieve 1:3 RR in today's trade. If that is the case, whatever the profit you have to take and you have to exit. Sometimes you should not, when you have such kind of scenarios, you should not expect that 1:3 RR will be achieved. That day could be an exceptional day. Things may not be happening according to your trade plan, but you should be good enough to understand the right areas where you should book the profit. So that is the reason why NTPC, the second trade, until this 5 minutes HLQ zone, it has given 3,450 rupees profit, which is 3.3% ROI as per one futures margin cost. So these are the two successful trades we got. But to get that success, where to exit should be very, very important to get the better profits. So exit in this 5 minutes high liquidity area is much better than exit because this 1 minute trailing stop loss is violated. Okay, this is about NTPC. The other one we discussed and failed is Pedialyte. This is a daily high liquidity supply zone. Already I explained, we discussed this stock on Thursday. Today is Monday, right? Last Thursday we discussed. So please look into that video. Directly how I fine-tuned, I explained in that video. Directly let's go to the 5 minutes because there is nothing much to learn from this stock. On Friday video, I told you this is a tested, this fine-tuned 5 minute zone is a tested zone. And moreover, prices went deep inside. Even if you think maybe second trade also it may work, it won't work because type 2 is also tested. See, I have drawn up to type 1. Type 2 is also tested. And moreover, prices went deep inside. There are higher chances the zone will be violated because it is a tested zone. Even if you think maybe it may work as a high liquidity, we don't have any clues that it could be a high liquidity zone unless our software tells that. So that's why you can't assume anything. Many of these zones will be violated, we know that. So that is what happened. And today, see, it didn't give any resistance at all. Price reached here, maybe small, next 5 minutes, and then immediately again it moved up. Some of the people might have kept the order flow because of that. Some small reaction, very small, negligible. Okay. So this is anyway expected zone. This is as per, we know when a zone will be violated. As per that concept, this is violated. Because a fine-tuned 5 minute zone is a tested zone. There are higher chances it will be violated. And most important thing is price already tested more deep inside this zone. So except that remaining we didn't have NTPC, I didn't plan, sorry, not NTPC, Laurus Labs is a daily high liquidity zone, not planned any trades from this zone. Why? Because this is a 2022 zone. We don't have enough data to fine tune up to 5 minutes time frame. This is a daily zone. Rally 3. One thing happened here in the data. Oh, something strange. I think maybe I didn't draw the zone properly, or is it like this? Maybe like this. Okay, anyway, this is the zone. Rally base drop. (2022) in the year zone. We don't have 5 minutes data to fine tune. I just left it because our focus is plan on the other stocks. LIC we discussed, Pedialyte we discussed, and Polygap just now we discussed. few minutes before. And now the last one is Supreme Industries. This is a 75 minutes high liquidity zone. We have a drop, 1, 2, 3, 4 base candles and a rally candle. And this zone is fine tuned with 15 minutes time frame. In the 15 minutes time frame, here you have drop base rally. This drop base rally again fine tuned with 5 minutes time frame. Here we have failed ERC candle as a drop base rally follow through candles. And recently prices entered into the zone, started moving up. Maybe next time also you can plan a trade, that is type 1 proximal. See, type 2 proximal level may work. Sometimes type 2 proximal may fail also. But those who, if you don't have any other trades next time, if our software shows this stock, no other stocks are there, at the time you can focus on such kind of stocks. This is the type 2 proximal. Definitely this indicates a strong order flow. If not, this is a morning 9:15 candle. If it is not because of the freak trade, definitely more order flows will be there. This zone might be very strong. Okay, this is anyway today price didn't come. Continuation to this price action, it moved even today up. It moved up. And moreover, this Supreme Industries is a newly added stock into F&O list. Last Friday it is added. So these are the high liquidity zone analysis, and most importantly the one we are looking for is the one I explained about POWERGRID in lesson 27. Lesson 27 yesterday released. Whoever looked into this stock today, you would have got a good profit. Let us directly get into the 5 minutes, because I am not going to explain. Already yesterday I have a detailed explanation and how I fine tuned. So please listen lesson 22 explanation. So this is on Friday's price action. Those who kept the entry buffer, they would have got a trade. So I told you two important points yesterday. Continuation to this trade, again prices may move further up today. That is one possibility. Second possibility, the price enter into the zone, give you another trade, and again it will move. This is our 15 minutes target. Go to the 15 minutes time frame. We have a 15 minutes target. We have failed ERC candle as a leg-in, you have a base and a drop candle. This is the 15 minutes target. So from here to here you have around 3.1% RR is there till the target zone. But here you have a pro gap is there. That's why in the analysis yesterday I drawn this blue color line. I drawn it yesterday. And I told you this could be your target. Don't wait up to here. The reason is there is a pro gap. Most of the time if the order flow is very strong, it may let the prices further go down. See, that is what happened. We got the entry, reached the target, and again finally it pushed. Prices came near to the zone, sharply it moved. That means a strong order flow is here. Why strong order flow? All the reasons I explained in our yesterday. Lesson 27. That's why I am not repeating that analysis, but only one thing I will show you. The reason why, of course this point also explained, but once again I want to make you tell the same point again. See, this area is having EMA, daily EMA 20. That's why I am believing this zone. That explanation I gave yesterday. And also I suggested you this zone you should plan only short-term trade opportunities, either intraday or short-term. Short-term means next 1 or 2 days. But the target it reached today itself. And tomorrow it may give another opportunity. It may work or may not work. That is a different story. If the order flow is strong, there is nothing wrong in trying one more deep entry inside. Another trade, in case if it goes, you can plan deep entry. After that it will. But remember, this trade plan is not easy. Let me go to the 5 minutes. You can't blindly, in a blunt way, you cannot take this trade. Why? Risk. The risk is high in this zone. How much risk is there? More than 3% risk. Actually, maximum accepted risk is 2%. More than 2%. If it is more than 2%, you can't take a trade from the zone, right? Still you can take a trade. Why we can take a trade? How we can take a trade? How we can take a trade if the risk is beyond 2%? You already learned the concept position sizing. If you would have done the position sizing, you would have limited the risk to 2% or below 2%. Let us assume 1.5% only you can accept. Still you would have got 6% ROI. You would have got 6% ROI, you would have got at least worst case 5% ROI you would have got in this trade. Actually, this trade gave you close to 10% ROI it gave. Close to 10%, 9 point something. Close to 10%. Half of that ROI you would have got even if you do the position sizing. Up to 1.5% risk level. Up to 2% risk level if you did the position sizing, maybe you would have got more than 6% intraday ROI today in this stock. Till this blue color line I have drawn yesterday. Yesterday clearly I mentioned this is our target. Why it is our target? Because there is a pro gap. There are higher chances pro gap will push the prices down. See, from this entry to this, how much profit you would have got? This is a 322. Let me open a calculator. 322 minus, so what is our entry? $326.20 is our entry. That means you got 5.8 rupees profit on each stock. More than 1.5% directly on the stock. But if you are taking margin, 4 times margin, let us say, maybe you would have got 1.5% to 4 times. That means 6% ROI you would have got with 4% margin. Why I am saying? Because we have to position size. So you can't invest the whole money. Some money you have to keep it hold. That way you would have got you would have position, you might have done the position sizing up to 2% risk level, maximum 2% risk level. If you can't accept 2%, you will position size up to 1.5% or 1.2% or 1%, whatever your risk level. Your entry won't change. This is your entry only. You can't take deep entry because the order flow is very strong in this area, and EMA 20 is also there in this area, exactly in this zone. Only thing you have to do is position size, no other option. And the futures, so you can't position size if you are taking 1 or 2 or 3 lots. If you are taking more lots, futures also you can do position sizing. Okay, forget about position sizing. Without position sizing, if you might have taken the trade, how much profit you would have got? Of course, that is not a correct way, but calculations point of view, let us see. So this is POWERGRID. Let me open zero the margin calculator. And here POWERGRID. So December futures, see, it is 1800. So into 1800, you would have got 10,440 rupees profit. $1,12,190. The value could have been even less near to this zone, because future price is, if it is down, the value will reduce. Definitely value could have been 1,11,000 some 800 or 900 rupees approximately. But still I will keep 1,12,000. So into 100 divided by 1,12,000. You would have got 9.3% ROI as per one future's margin cost. But you can't take future like that, because the risk is beyond 2%. You have to do position sizing in the cash segment. You should take the trade in the cash segment, not. But intraday trade, broker will be giving you margin. Because he is giving you margin, you can't use the whole margin. If you are using whole margin, again beyond 2%, risk will be executed. Around you are getting 3% or 3.5%, you are getting risk for that zone. That's why whatever the margin you are getting, at least you should reduce that margin to 30% level or 40% level. That way at least you would have got around 5 to 6% ROI you would have got from this. That means in this 10,440, instead of that you would have got some 6,500 rupees or 7,000 rupees profit you would have got by doing position sizing. By taking 1,800 stocks, you might have got that much profit. Still 7,000 rupees profit around that value. See how accurately this concept worked. The reason is we are following the principles. It's not that I did accurate analysis or I did not do accurate analysis. No, it's not that. We are following the rules, fundamentals. Whatever the theory is there, the theory we are following accurate way. If you are following or I following, we will be doing analysis the same way. Whatever the analysis I did, same analysis you will also do. Doing analysis is not a great thing. Please, first you have to understand that point. Believing yourself is the great thing. I repeat again, doing analysis is not the great thing. Believing yourself is the great thing. First, everybody should believe ourselves. What you have to believe? We can do anything. Nothing is impossible. We can do anything. If you think like that, again, things won't work. Whatever we are thinking we can do anything, you have to do hard work for that. You should put best effort. If you are thinking like this and not doing it, is like nothing but dreaming. If you dream, you won't get the results. You have to believe yourself and you should put effort. Always you get the best effort. Always you get the best result. Hope you understand what I am trying to tell you. So this is about the power grid we discussed in lesson 27 yesterday. And today it gave you the trade exactly, and also it reached the target exactly the same way what we discussed. And prices are reacted the same way. From here it reacted and entered into the pro gap area. This is the 15 minutes pro gap area. And then the pro gap again pushed the prices till the zone. Of course, it happened in the last hour of the market. Still, if you take the trade, some more profit you will get here, but minimal profit. Okay, this is about power grid, what we discussed in lesson 21 analysis, and also this is the end of the report. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.